Welcome all to another Monday, another Traders Community podcast. We have the glorious Madavi here joining us. An interesting day in the markets today. We had a big sell-off on bonds and a big rise on oil. Despite that, stocks held up through the day, most of the day. They were down marginally on S&P, down a couple of hundred on the Dow. We did some levels in some podcasts yesterday. We're walking through technicals, and that's pretty well how it played out. So just quickly to put it in perspective, it's all about bonds, and the 2 years sold off 17 basis points to 213, and right through the 5 year was 20, sold off 20 basis points to 234. The big one was the 10-year that everyone watches is now at 231, and the 30-year is at 253. That was up 11 basis points. They were already weak. We have oil up, inflation concerns, and then during the day, Powell was at the NABE Conference, and when asked if they would be more aggressive, he confirmed that, and hiking by as much as 50 basis points if need so. In reality, it wasn't much different from what he said on Wednesday, but it was the market takes what it wants to be, right? We're in the FOMO greed phase, hence Gordon Gecko on the front there. We saw that made it a little bit difficult to trade, particularly in some of the other speculative names. As we mentioned many times, what happens is the market tends to get into a FOMO phase at the top and a fear phase at the bottom. So FOMO being fear of missing out, or AKA greed. So without further ado, I'm not sure if I welcomed all the punters and dribblers, investors and traders today, but if not, welcome. And I trust everyone had a great weekend. It was a great week's trading last week. Let us know too if you enjoy those videos we did, just the technicals with NovaWave on the weekend. They take a bit of time, so if there's an interest there, we'll keep doing them. If not, so be it, right? Let us know also what you want to see. Remember, this isn't financial advice. You need to make your own financial decision, understand the risk. This is just a view of what we as traders saw on the market, what we see developing, and hopefully that can help. Okay, so let's quickly, where we are, 112.73. Part of the move up was because of Europe putting sanctions on Russian oil, and the Houthis put a few missiles into Saudi somewhere. But in reality, it's just more of the same. We're into a new month. Oil's tight, obviously, and there's all the geopolitical risk and speculators, and it's a thinner market. Nat gas, back near $5. The Russell did like a triple bottom today, around 220.50, close up 20.69. S&P closed slightly down at 44.69, got as low as 44.25 or so. Nasdaq was the bigger one as far as the violent reversal. It's at 14,400, and volatility, it did bounce a little bit at the end of the day, but still pretty much closed not far off its lows, right? Just up 0.5%. So let's have a quick look at the SPOOs here. So pretty much as we said, so here's the weekly. It traded off that. You can see what it did. It went to that weekly Cajun. So from my point of view, that meant trading from the short side, given the significance of that, and it, which meant it would go down 20 and come back 15 pretty quick. So law of averages, it will retest. Was that enough for retest at the 50 there, that green line? We'll find out. If we look at the daily, you can see more clearly what it did. You can see that 50 on the daily as well. So that's what held it all up today. It's all technical. That yellow line's a 200, just short of the cloud. And if we look at the 240, So it wasn't an easy market to trade unless you're pure scalping, but on a position where you're looking to put something more solid on with those weekly levels I just showed you, you can see what's going on here. This is a 240 chart. Let's widen it up. So this is today, and you can see that, you know what, I'm going to go hourly, Madavi, because that's not really showing. So you can see that we've just continued up since that low from last week, and we keep coming off the Cajun. Well, today, that's the pink line, today we flipped around a bit between the Cajun and Tank, this is what made it difficult. So we need to keep an eye on these levels. We're in an overbought situation, all these Murrays. So we need sideways if we're going to move higher to get strength, or lasting strength, for want of a better word. So keep those levels in mind. Keep it simple. Your daily resistance, your daily support should be enough. Then watch your order flow through the day. Okay, let's move on to Nasdaq. That was a lot more nastier, wasn't it, Madavi? It looks like harmless on the weekly.
Oh, man. It was terrible in the afternoon. I mean, just made no sense.
Yeah, it's doing it on really thin volume. Or not, the volume's there, but it's very skittish.
Yeah, skittish and on some stupid news that didn't make no sense. I don't know if that was the reason it ran up. And just, I don't know. I didn't think it was going to go that far. Then it went, and just kind of, I think, well, in the morning, in the afternoon, just got chopped around, held losers too long. Same old story.
Yeah, I think it chopped. I mean, it came off that 50. So I think it was just all technical buying, and I think it's just systems buying and selling long-term versus short-term. But the weird move, the sell-off was easy. That was Powell. The weird, unusual move was that buy. It may have been, I mean, the only thing I can put it down to, because I couldn't see anything, was hedge fund buying, the rebalance, 10 minutes to go. But it came out of nowhere. And if you noticed, Apple kind of led a lot of that. It was getting given, and then all of a sudden it exploded. There may be something else, but that's what it looks like. That's why we say look at order flow and stuff, guys. But so, from a longer term point of view, it's hit all those targets, right? So there's a lot of resistance up here. And remember, this time last week, they were calling for the end of the market. It was all crashing, these death crosses, all that BS. And we rallied hard. So it was a beautiful, pretty simple into that, because you had events. You had, in the middle of the week, you had the Fed, and the close of the week, you had triple witching. So you knew what was going on. They basically cleaned out the puts here, cleaned out the calls here. I mean, the short side of it, right?
Kind of had the Fed saying it's going to go 0.5%. So it's all bearish news. And then you have the strength come in. Yeah. The market's it's not too far away from the all-time highs. One more week like we had last week, we'll be right there.
Yeah.
So
yeah, it's only 2,000 handles away. Which is, when you think what's going on in the world, this is why the greed factor, I say, and I think that was this week's theme, the greed factor is so overwhelming, and the what's the word? When you just think of yourself, en masse, right? So that it's oblivious to inflation. If you're poor right now, it's very close to where you can't pay to drive. Your food's outrageous if you can get it. There's supplies short. You got wars going on. You've still got coronavirus, popping up. Granted, it's different strains, but it's there. And then you've still got a massive proportion that lost all their savings and all their money out there. I mean, and here we are, the stock market oblivious to all of that. That's the sort of thing that, underscores what's going on. And that's why, a technical point of view, we just have to look at pure technicals as a trader, because if you get caught up in that, it just makes no sense, right? Yeah.
I mean, so you got all, but like I said, a bull market, sometimes it's You know, you're going to have these before it breaks down. But this is more and more convinced me we're in a, you know, the bear market than a bull.
Right, it's behaving like that. Like no one was buying this until basically a day ago, as far as a herd goes, 2 days ago. They all got in after, the further seemed to come in after Powell, picked up yesterday. Everything I read was bullish. It's like accepted it can only go up. Now, nothing, I mean, so that's, from a technical point of view, as we said, we've been through those charts, fifth and a third, you can keep both options open. But the strange thing is the crowd behavior, just oblivious or wanting to be oblivious to what goes on. That's not unusual when there's a lot of people caught. That's why we look at a lot of the high risk, the dribbler type stocks and things like that. And there are multiple markets going on. There's a lot of people that don't look at anything beyond their own little field. So you got that going on. But that, at the end of the day, there was a lot of money made and lost on puts and calls last week. I mean, in that monthly move from extreme lows to extreme highs all in 1 week. So let's look at Rusty, which is, I guess, the most speculative end. So it came down and held the hourly cloud, and this was a bit of a tell on everything else, because this is the smaller stock, smaller investor, basically. You can see it did a double bottom where it came in 2 days ago when it tested. But you've still got this, there's more a fear of missing out than a fear of losing right now. It's kind of weird, right?
Yeah.
Because you wouldn't expect that with what's going on. But perhaps it's a distraction, the market from reality. So anyway, on Russell, this is the big level, this just over 2100. Remember, that's that big breakdown that everyone's going to be watching. So back on the stocks, just keep all that, people. What we all know the fundamentals. Watch how this plays out. That'll tell you if the market's still short or indeed this is of something really major. Okay, so oil. What's going on there, right? So it seems to me everyone seems to be the opinion when oil falls, it's topped. When it's going up, it's going to 200. So it's very much that mentality that's out there. In reality, and we did a video on it, it's just trading very, very clinically. We mentioned on the daily, all this off the 50, look what we came back. We didn't even get stalled on the Cajun and Tankin right there. So you know, as far as daily, you can see what's happening. This is either an A or a 1. Like this is either the top, or we're going significantly higher through more situations, which is interesting when Powell, etc., is talking about it, but the market's ignoring it. All the energy stocks aren't. They've made lots of good gains there. Some of them are at highs. I saw Hess at highs. Hasn't been since 2008 today. And on weekly, you can see it even cleaner. And what's interesting, it's rebalance on the Chicow. Right? So that's that move from before. We measured against 113.70. It's almost there again. So keep that simple. To trade it, look at our 240. Again, as I said the other day, it is clinical stuff, oil. It came off that minus 2.8 at 90, just over 92, and it's just run beautifully. Look at these and accelerated each time off tanking. And we've come right into the breakdown level again here. And on your Murray, look at your measured move. Almost 8.8 again. This is clinical stuff. So keep all this in mind with your positions. Don't get too greedy through it all. Look at Natty. Okay. So Natty Gas is still just locked between Cajun and Tankin. We're back near 5. It's wanting to get over there. What's interesting, Europe had their lowest day for quite a while in natural gas prices. So we look at Natty daily. You can see it bounced again off Tankin. This is what we're watching again. From the top side is this triangle. Downside's Tankin. So just keep it all clinical. We all know it's out there. We know the risk. And just natty on a 60-minute. It's a pretty good little trading vehicle. So today, all it did was come down and retest that high of last week. That high break, the breakout point right here. And we try to get up to the high, didn't quite get up there. So again, look at the grid, plus 2/8, right? So pretty clinical stuff there. Let's look at gold real quick. Wheat still in that pennant talked about. Gold actually held in pretty good when you consider that the dollar had a strong day with Powell. Had a big bounce today, dollar yen, etc. After it had been selling off. So look what it held on weekly, this Tenkan, the orange, it's back over that. Let's see where it goes from here. But obviously we have inflation. You don't have to look too far for that. Okay, we won't spend too much overtime on commodities. So let's quickly look at the main stocks. Obviously we've been playing Mullen as we talked about. That was a real beauty today. It exploded. You can see how we've been working it off the pennants and sharing it with you. And it's a little one. That's why we're sharing it. So this is one for everyone, right? Madabi, I don't know about investors on this one, but traders, certainly punters, and even a dribbler might. He might be the guy buying up here, though. Hey? So nice little pennants. So that's a great, when something has volume, so this has really big volume, that's what attracted us. Pennants are basically like a pincer move, they're squeezing. See them all? Bang. Now, look how overshot we got on the Chico up here on the blue. See that? So keep that in mind. When you see that, you know something's overbought or oversold, right? And so anyway, we had a nice measured move. We got over 5.8, but more specifically it was $4. And then you could see if you're watching the order flow, this was actually, fortunately this take profit and getting a good short on it. But you could see the volume coming in. This is something we've been in since down here, right? Played it here for this move. This was a secondary. What it feels like, and my theory is that the market got really short on that secondary, and it was a stock that a lot of people have been short on, and that squeeze. Then all of a sudden, the dribblers enter the fray, and they're all talking about this is that, nice car. What else did they say? Great investment, long term. Boom. But what it did do, perhaps if I showed 10 minutes to be clearer, what it did do is it did come back and bounce. Now, in reality, this is why you always know your levels. Look what this low was. That was the breakup from the other day. Remember on Friday? That was the breakup. It's all it did. These things replicate. They're run by bloody computers or algorithms, whatever you want to call them. And look at the acceleration when it broke through everything here. And you got a nice little kiss of death, a 370, and you got almost $1 out of it. So keep an eye on that, and you look at your grid. Everything's measured, but the big thing on this one's pennants. If you can understand the pennant, that's a good one. There is options on this, so I think it's 255, so that probably influences it as well. What else? So, Madavi, you did Nike after hours. Do you want to walk us through that? Let me see.
Yeah. Well, Nike came out and it basically had good earnings, and it started running up, looked pretty strong. I picked up a couple at, I don't know, like 35.50 or something, and I got out of one of them at, I think it was 38.50, and the other one at 38, and that was all I did.
Nicely done. Yeah, so this is, I guess, Nike, and who's that other one? Lululemon or Lululemon, LULU. It's always two very active stocks in that space.
And one thing with Nike, and it usually performs as a performer. So it's usually comes okay. I mean, not all the time, but most times, it's a fan favorite, they call it. A lot of people like to buy it. A lot of people have bulled up on it, and so people are used to just buying that thing. I don't know why, but like I said, there's been times where that thing's tanked, so you got to be careful. But if there's earnings and it's pretty up, you could probably. I mean, I bought the thing when it was already 5 points up. So,
yeah. Yeah, come here, David. Yeah, and that was really the only big name out today. So Nike and Lululemon, like a Lululemon, I said, like another one in this space. It does crazy stuff around earnings, and they often come out where there's not many other things out. So that probably explains some of it. As far as a measured move goes, it was pretty well perfect. -3/8 all the way to +2/8. All in a matter of seconds or minutes. And you can see what it did there. So we'll see how that plays out tomorrow. That'll be one to watch tomorrow.
Sorry, a lot of these favorite fan stocks, when people are fans of these stocks, I mean, you got to be careful about shorting them. I mean, you get beat up, especially when they're really gung-ho about them.
Yeah, I think it comes down to this. Since the start of the year, when it started really breaking down, it broke through that cage and it's never been over it again. So it tested it here in February, tested it here in March, and here we are testing it today. So let's see if this breaks above here. You got this cloud all the way above it, but that would be the first time it breaks off. If not, then it just continues back in that move down, which is probably got a, looking at this chart, it's not too dissimilar to the market, really, is it? You did have a gap down here. I'm guessing that's earlier earnings, unless there was some news. Looks like a gap up and then a gap down here. So two events there. As you can see, there's lots of gaps in this. As Madavi said, it can be a real fan favourite. I remember this one. This was a 130 to 150 gap on earnings. And here you got a gap down. So it does a lot of these gapping. And this one, well, this isn't showing a gap here, but it could well be if we go to short term tomorrow. Yeah, so it's going to show a gap up tomorrow on a daily chart because that's based on the close, right? So, well, that's about it, really. So tomorrow, and make sure, everyone, if you haven't, we do a weekly report on everything. Comes out on usually on Sunday, sometimes on Saturday. A bunch of people put it together, but you'll have everything you need. Well, so the true meaning of the word macro means everything bigger. It kind of gets construed by a lot of people. So everything comes together in a picture. They're all related. It's like a big matrix: stock market, bond market, commodities, currencies, etc. So we go through them all. And usually there's a theme. This week is only a sheep lets himself be sheared. Keep that as a memory, because just think how bearish everyone was last Monday, where it was, and all bullish today. Be the guy buying at the bottom and selling at the top is what you want to work towards, or near those levels, but certainly not the opposite. So anyway, a good wrap up this week, what's coming out and everything. So today, we didn't have much. But tomorrow we have nothing really out in the States. Canada has a monthly industrial report. Whoops. UK has some industrial trends for the US. For us, Adobe has their earnings tomorrow. And that's a bit of I can't remember that as not being that nice to trade. So, anyway, that's out tomorrow. As far as what we're looking for mainly in the US is we have on Wednesday, we're going to get new home sales, and the crude numbers are getting more and more interesting. We have a 20-year Treasury bond out, which is going to be interesting. Thursday, of course, we have natural gas. You've got all of the PMIs out on Thursday, so it's going to be a big day. Everywhere from the Eurozone, Asia, the US, etc. The ECB General Council meets in Frankfurt on Tuesday with the EU. As far as the US goes, we've got jobless claims, of course, durable orders, and of course the PMI that we said earlier. And when do we have? I thought we had CPI this week sometime. Am I missing it? No, I've already had CPI. I'm going nuts. So on Friday, one to watch will be that Germany IFO Institute. And as far as we go, pending home sales and Michigan sentiment. So you can see what you want to base your trades off is what's going to happen. I always look to see, okay, what can be a market mover? The main things are PMIs for us, consumer sentiment. And you can put those in as disruptors. Now, the reality is, though, it's all about Russia and the Ukraine right now. So work around that. If oil at 112.73 doesn't tell you that, I'm not sure what will, right? So there's a real disconnect between Main Street and Wall Street, obviously, as far as, people keep going on about earnings and all this. These are the same people, by the way, this time last week were claiming the end of the world, be it on the FinTwit dribblers, the CNPC, CNBC types, etc., etc. So just know your levels. Anything else, mate?
No.
Yeah, not much else really to cover. And really go back and look at those specific YouTube videos on Nasdaq, ES, natty gas and oil. The levels don't really change. You watch how that plays out, particular ABCs. Okay. Have a great evening. Remember, if you like us, subscribe to us, and all those good things. Bye now.